Yo, yo, yo! And welcome everybody to a brand new show, Owl Eyez on Base DeFi. Today, in fact, this is going to be a new show where we cover different base projects and yield farms. And I'm very excited to learn more about generating yield with an expert in the field. So my co-host, I'm very proud to start this new show with Crypto Noah. How are you today?
Dude, I'm so excited to be doing this show with you, man. I'm super excited. Had a good workout this morning. Liquidity pools are looking good. So, yeah, excited to get this going and give some value to the old members.
That's what it's about, builders supporting builders, creators supporting creators, and just us going on this journey together. I remember when we first met, I was just in awe of the information you were sharing. So, since this is episode number 1, how do you remember the first time that we met?
Well, so I did a 3-month Euro travel trip. So I was in Europe for 3 months, little less than 3 months. I spent 12 days in Morocco, but I went to NFC Lisbon and I met Clarissa, who is like in charge of the Algarve Portugal Blockchain Foundation. And she came up to me because I was on a panel speaking about DeFi. And she was like, yeah, we have a community down in South Portugal. And I was like, oh, we're already going down there because we did the Vinegal Caves, which was extremely epic. And she was like, you should do like a little pop-up event for our community. And the funny thing is, man, I don't know if I ever told you this. It was actually supposed to be me and her husband talking to each other. But then she set up everything and I plugged in my computer and her husband was sitting in the crowd. And she's just like, okay, here you go. And all that stuff that I was going over was just from my brain. It was no preparation.
Dude, I mean, if that was you winging it, if that was you on the fly, that was impressive, man. I thought that was like super well polished.
No, man, that was from the fly, like immediately in that moment. I was like, all right, well, I guess I'll just talk to folks about DeFi. And I was just showing everyone the yields you can generate. And that pool that I showed you that I was in, maybe that'll be a good pool we get in, was printing like 750% APR at the time. And yeah, we'll get into like why I'm really bullish on yield farming on Base. But yeah, we met and glad we did, man, because I think we're going to provide a lot of value to folks.
Man, honestly, like, so first of all, the fact that I also went up to NFC Lisbon, so it's crazy that our paths didn't cross there, but I feel like it was meant to be. When you came to the south, I went to the Algarve blockchain committee hosted by Clarissa, and listening to your talk, I felt like it was a TED talk. And for myself, I spend a lot of time. I spend like the majority of my time looking at different base projects, but my focuses are more on some utility projects, but then NFTs is really where I have I guess a personal interest. And I thought it was fascinating that although I feel like I spend so much time looking at projects and connecting with communities and joining these spaces and highlighting projects that I'm really supportive of, there's this whole other side of crypto that I know of. And I remember in the 21 cycle getting into some DeFi pools and getting some pretty crazy yields, but then the project like just collapses or something. It was like 2,000 for a day and then rug pull the next. I'm like, what the heck? So I was like, okay, this was like, I guess, early DeFi, and I was just like, okay, I know it's evolved since then. I would love to talk more about that, or hear from your perspective how you feel like yield farming has changed from the previous cycle to this cycle. But it's just a topic that I haven't had the time or knowledge to dive into until now.
Exactly. No, great question, man. So yeah, if you guys haven't heard, there was this event called DeFi Summer, right? And what started it all was Compound made it so that Compound's a money market platform where you can, for example, stake your USDC on there or your ETH and use it as collateral to borrow other assets on the platform. And what they did was they created this incentive to where if you provide liquidity in said asset, not only are you getting a yield in the asset that you deposit on, but you also get to earn comp tokens, right? Every other platforms started to copy them, and they started creating these incentives to where not only can you earn a yield doing these, whatever the platform was, but you also get to earn in the platform token. And the melee and destruction it caused to people's portfolios was that people were farming the comp token, and we were in the bull market, so they're thinking it's going to go up forever. And then one day it just dropped. So if you're accumulating this comp token or this Aave token or all the other platforms that were doing it, when it dropped, it's like you accumulated all of that for nothing, right? It's like it's a house of cards. You spend all this time building these cards, and then one day the bottom just falls out. Now, before I talk about what changed, it's 3 ways to get a yield in crypto. No, it's really 4. And in TradFi is 3 main ways. And this isn't including financial products like bonds and things like that. You have fees that you earn from borrowing and lending. This is true in crypto and true in DeFi. You have fees you earn from providing liquidity for insurance, right? Insurance premiums. In crypto, you have like Insurace and Nexus Mutual. And then the third way, well, in TradFi, it's 3. The third way is providing liquidity on exchanges and getting paid swap fees, which is the most profitable way, because right now crypto is still looked at as like a casino. And in order to buy tokens, you have to swap on these decentralized exchanges. So the people that are providing liquidity on these decentralized exchanges are earning the fees. And the fourth way is staking on a blockchain's validated network, like the ETH.2 beacon chain or the Solana chain, and you get like a small yield for securing the network. Now, having that said, the biggest thing that's changed is that Uniswap launched concentrated liquidity, honestly. So Uniswap V2, and this was the same for SushiSwap, it was the same for all the decentralized exchanges, because depositing your money on a money market platform, you get like no more than like 10% on average, and that's on a good day, right? And then for insurance still has a long way to go, so it's not worth it to deposit your liquidity on these insurance platforms. But on these DEXs, DEX is short for decentralized exchange, Uniswap V2 allowed you to take, like, for example, your Ethereum and your USDC, you deposit it on the platform. But V2, you were using your liquidity from X to Y, so whatever the price was. So if ETH was 3K or 4K, you couldn't specify what price you wanted your liquidity used between. And the issue with that was that it made your liquidity inefficient because sometimes it wouldn't get used, right? So when Uniswap V3 launched, they had like a patent or something on it for like, I forget how long, it's like 1.5 years or something, but now it's expired, and every single decentralized exchange has concentrated liquidity. Concentrated liquidity allows you to say, hey, I want to take my ETH, I want to take my USDC, I want to deposit it on Uniswap or SushiSwap or whatever decentralized exchange you're looking at. And I only want my liquidity used when the price of Ethereum is in between, let's call it 2 to 3K. So anytime the price of ETH is between 2 to 3K and people go on your pool and swap and the price is in between that range, you're getting paid in Ethereum and USDC. So now the biggest change was you got to have your liquidity become more efficient, because concentrated liquidity rewards intelligent liquidity providers. And then 2, it wasn't like DeFi summer 2020 to where you can only earn high yields in these, for lack of a better word, shit coins or risky altcoins. Now, if you were smart, you would take those altcoins and sell them for Bitcoin or ETH. But, when you're in the bull market, you're drinking the Kool-Aid. We had the global, event that I'm not going to say. So they were printing a lot of money, stimulus checks. So things were just super crazy back then. But now you can look at all these pairs and you can get a high yield on these blue chip assets and not have to worry about them dropping like 90%.
Yeah, I think the shift from V2 to V3 liquidity is something that I think is a fundamental shift to give opportunities to still earn high yields but on safer assets. Now, I would love to learn more about setting parameters and finding pools, because obviously for myself, I saw you give a presentation about this, and you were using blue chip assets and still getting insane APRs, insane to me, insane to like conventional markets, obviously. But I'd only ever seen those sort of returns with the risky low cap holds, and as soon as somebody else starts providing liquidity, it gets cut in half, and it was just like extremely volatile assets. So for a novice like me, how would be the best way to get started in going down this rabbit hole?
Well, obviously we have our program where we have a course and we have a community where we have like 4 or 5 calls a week where we're doing a 49 weeks to freedom challenge right now, where we're literally farming with our members, telling them which pools to get in. But if you're someone who wants to do it on your own, the first thing you want to do is figure out which 2 assets you want to provide liquidity in. Because like I was saying, back in 2020, you have this thing called impermanent loss, to where like let's say this is your range. This is Ethereum and USDC, and 2K is your bottom range and 3K is your top range. Yield farming on decentralized exchanges is like a limit order for the underperforming asset. And if you don't know what a limit order is, it's basically a way to be like, okay, when the asset hits this price, buy or sell. And that's the same for the top or the bottom. You can choose, like, when the price hits something, you can choose to be bought in, or if you're already holding an asset, you can choose to sell it. So that way, if you're not by your computer, you can still, get your good buys or your good sells. Now, when you're providing liquidity and this is your range, and this is ETH USDC, when you go out of range to the upside, it's a limit order for the underperforming asset. So if you go out of range to the upside, that means Ethereum is the overperformer. So that means that you're going to be in 100% USDC, not including your fees. And if it goes out of range to the bottom, you're going to be in 100% ETH, because ETH is the underperformer, right? So you don't want to provide liquidity for any asset that you wouldn't be holding on your own in your wallet, because if that asset goes to zero, then like I said, it's going to limit order buy it, and you're going to be in all of that asset, and you're going to lose your ETH or whatever asset that you paired it with. So after you go ahead and find what assets that you want to provide liquidity for, you want to find projects with what's called good volume to TVL ratios. Okay, so we have this custom tool that we have. It's called our Yield Hunter tool. Now, there's something called a volume to TVL ratio. Volume is the amount that's trading hands. TVL is how much liquidity is in that pool. And the best way to understand this is thinking about Pac-Man, right? So if you have a good volume to TVL ratio, that means that the volume, the amount that's trading daily, is higher than what's in the actual pool. Because anytime it's being traded, that liquidity is generating fees. So like this pair right here, I'm not sure what GIB is, but this tool, it basically shows all of the highest yields in all of DeFi in real time. And I have it filtered to Base, but we can look at all chains. But this is the Base show, so we're keeping it on Base. So right now in Base, the top pool on Base is GIB wrapped ETH. Right now it's paying an APR of 4,192%. I'm not getting in that pool because I'm not sure what GIB is. This is also a 1% fee tier. So that means it's a 1% fee on each swap because it's a higher risk pair. But if you look at the volume and TVL ratio score, it's 11.49. And what that means is you have volume of 2 million. So you have $2 million being traded daily right now, but it's only 176K in liquidity. So that means this 176K is being used 11.4 times. And if it's being used 11 times, it's generating fees every time. And that's why the APR is so high. Now, if I scroll down, right, these volume to TVL ratio scores aren't good. So Tony wrapped ETH, you can see that, okay, the yield is still 220. It's still good. But here, let me see. What is this? The correlation. Oh, that's the correlation. Okay, I'm not sure where that pair went, but like if we go back to, let's just look at Kurt wrapped ETH.
Well, in fact, I see Zora down there. Zora's an absolute giant. It's the talk of the town, really.
Okay, so let's use this as an example. So right now the APR is 215%. The reason why it's a zero correlation is because it's paired with a stable coin, and this is going to have a Zora wrapped ETH is going to have a higher correlation because Zora and ETH is going to move closer together than Zora and USDC, because USDC is designed to be at a stable price. But if you look at the volume to TVL ratio, you can see here that it is $12.4 million in volume, but the TVL is 6.3 million. So the other one, remember, it was 176K in TVL, but it was like 2 million in volume. So that's why you had a score of like 11 point something. But on this one, it's only a score of 1.97, which is still good. 215% APR is still wildly outpacing inflation, which is, the goal.
Is this ratio, a higher ratio is better or a lower ratio is better?
Higher ratio is better, because what determines a high ratio, So remember, this is the volume right here. This is the total value locked, the available liquidity. So if you have a TVL, like let's just say, for example, this TVL is 6.3 million, right? But let's say the volume is only 3 million. That means that you have a TVL that's higher than the volume. So going back to the Pac-Man example, if you have TVL that's higher than the volume, then that means that you have more Pac-Man with less dots to eat. But if you have volume that's higher than the TVL, right, that means that you have less Pac-Man with more dots to eat. It's less liquidity, but it's being used more times. Does that make sense?
Yeah, absolutely.
Yeah.
So, okay, so this pool above it, so Zora and West. When you asked me earlier about tokens that I would feel comfortable with holding, for me, Ethereum, obviously, but then what's to pair with it? Now, a wise friend said to me, in fact, Russ from Metacade, shout out to Russ. He was saying, like, look, the play is simple. Look at Coinbase Ventures, see what they've invested in, because there's obviously an aligned interest. I'm like, okay, that makes a lot of sense. And Zora is obviously, as I say, obviously, depending on how much you're looking at base projects, Zora is one of the hot topics right now. I mean, they have a big investment from Coinbase Ventures, and Jesse talks about them regularly. Content coins are being created, like creator coins. They have a new flywheel, and everybody's talking about Zora. So I'd see a lot of upside potential with Zora. So that would be an example of something that I would be looking at. But I know you're looking for, I guess, like juicier apples or even other opportunities. Zora was paying 200%. Where does that stack up for you in terms of risk reward versus some other projects?
Well, so before I answer that, I want to show you this here really quick. So there's a concept called time in the market versus trying to time the market. And this chart shows the value of 10K invested into the S&P from January 2003 to December 2022, which is a 19-year time frame. So if you stayed in it all of the days, your 10K will be worth 64.8K. If you miss just the 10 best days in 19 years, your performance is more than cut in half. 19 years. Then if you miss the 20 best days, your performance is cut almost in half again. You only made 7.8K. If you missed the 30 best days or more, you only made $1,700. And if you missed the 40 best days, remember, this is just a little over a month. In 19 years, you start to lose money. Now, when it comes to providing liquidity in DeFi, it's the same thing. So if I pull up Zora, and I think Zora should be our test example. We're gonna do like a case study. So if we look at Zora, and I want to look at, when you're providing liquidity, you want to look at the Zora USDC chart. This is USDC. So, it's kind of consolidating right now, but obviously with the bull market, I definitely think Zora is going to pump as well. And I think ETH is going to pump as well. So, but Zora will probably outperform ETH at this point. The market cap is only 297 million. In a project like this, I can see it going to a few billion. This is Coinbase's base chain's first bull market. People don't understand how huge that is. So now we want to look at Zora, the Zora ETH chart, right? So now going back to time in the market versus trying to time the market. If you look at this, you can see that there were a few volume candles that really stood out. You had this one and you had this one, and that's this big candle here. And then that's this candle here. Now, you never know which days are going to be the best days. So just because the APR isn't like extremely high right now, just like in the pool that I showed you in the presentation, there's going to come a day where there's going to be a huge green candle or red candle, a big volume spike. And you want to make sure you're in range for that day, because just like if you miss the best days buying and selling in the S&P, if you miss the best days when providing liquidity, it's going to have a drastic impact on your performance. So how I like to think about when I'm providing liquidity is, I want to look at the current yield, but I also want to think in my mind, like, is this something that's going to be accumulated heavily in the future? If the answer is yes, I want to set a range that will allow me to maximize the short-term yields, right? So maybe something like this. And then I also want to set a range to where, like, once those big candles happen, I want to be in range, because it's like, I always compare this to selling shovels during a gold rush, right? If you know it's going to be accumulated like a lot, then you want the people who sold shovels, they made more than the people who were, you know, mining the gold. Everyone didn't find gold. Everyone's going to be coming and buying Zora. Some people aren't going to take profits. Like, some people are going to make good money from it, but some aren't. But if you're just accumulating fees off of all those other people buying, then it's guaranteed. And, you know, usually you don't like to use the word guaranteed, but it's guaranteed that you're going to make money, because you're making money from swap fees. Like, it's a real yield. So going back to our yield hunter tool, if I type in Zora and just look at all the yields, you can see right now there's a Zora USDC pool on Aerodrome that's paying 1,205%. That's incredible. That's good. You look at the volume to TVL ratio, you can see that it's 1.3 million in liquidity, but the trading volume was 16 million. So the volume to TVL ratio was 12.3. That's really, really good, right?
Question.
Now, yeah, go ahead.
Okay, so over on the pools category, I see that the fees 0.27 and 0.31%. What are those fees?
These are flat fees that a trader has to. So, like, for example, if I want to go and buy Zora on Aerodrome and I have USDC, I'm going to pay a 0.27% fee no matter what the size of the transaction is. And that fee gets split to the liquidity providers who are putting their liquidity in the pool.
So for this, in this case, since we're collecting fees, we want to see a higher number on that.
It's good to see a higher number. Like this one right here, you can see that it's a 1% flat fee, but the APR is lower, right? So I'm always going to go for what the highest APR is, because the APR is factored into it. And the reason why this is lower is because why would I pay 1% in the Zora USDC pool on Uniswap if I can go to Aerodrome and pay 0.27? So it's like, even though the fee tier is higher, and you can create your own pool. And now with like Uniswap hooks, you can choose your own fee tier. So I can create a Zora USDC pool and I'm the only one in it. I can have a 5%. But when people are swapping, the Uniswap smart router is always going to make sure that you can make a swap and pay the smallest amount of fees. So you still want to be competitive. Does that make sense?
For sure. And I guess my next question is, because obviously, like, this is the Novatel's proprietary website you're showing me, which is like simplifying the process a lot. So I mean, I would love to. I mean, I'm not in the club yet. I think I'm probably going to join to learn this stuff, because this is like spelled out for me, and like I could very much benefit from this. But if I wanted to get into that pool today, so I've set $1,000 aside to start this challenge and like learn a bit more, see about some different yields, and start pairing some together. Maybe we even split that across a few different projects. I actually have a few in mind, but how would I go about providing liquidity? Zora USDC, I see it's on Aerodrome. How would I go about doing that?
Okay, so let's get you in that one. That'll be our first case study. So let me get rid of this. So the first thing, you have a Dex Screener account, yeah?
Yeah.
Okay, so the first thing you want to do is set your range. So right now we're on the Zora wrapped ETH, but we want to go on Zora USDC. Now you have to keep in mind, it's going to be a little harder to stay in range, especially when Zora pumps, because it's paired with USDC, right? Versus if it's Zora wrapped ETH, like if we're looking at this Zora wrapped ETH pool, and let's say Zora and ETH does a 3x, the chart is going to remain flat, because this chart is the performance of Zora and ETH together. The chart's going to remain flat because neither one of them outperformed each other. But if we go back to the USDC chart, Zora USD chart, if Zora does a 3x, then you're going to see this kind of stuff, because USDC is going to be flat. So now there's nothing wrong with that. It's just good to be aware of. So when you have that in mind, and you know Zora's going to pump, you probably want to leave enough room to the upside, so that way as it's going up, remember, the smart contract is going to be buying more USDC and you're going to be selling your Zora. Now, a lot of people might be asking, well, won't I make more if I just hold my Zora? Yes, but you never know when Zora is going to pump. And if you look at a market maker, they have a percentage of a market making and yield farming is the same thing. They have a percentage of their portfolio in cash. They have a percentage of their portfolio in assets. And then they have another percentage of their portfolio that they're using in market making, because like this could be consolidating for another 4 months. You have no idea. So it's good to get into a pool so that you're accumulating more Zora and USDC, and you can use your rewards to buy more Zora, add that to your HODL position, and then once it pumps, you have more to sell, right? So you're just setting up your portfolio to maximize, like, okay, when the market pumps, my Zora bag's going to pump. When the market's consolidating, hey, my liquidity pools are going to be doing great, and I can always sell when I want to. So now you want to set your ranges. I'm going to go here, and this is going to be the range that we set for you. And you're going to mark this on your chart as well. Okay, so I'm going to go here, and then we're going to do another one. I'm going to go here. So now we're going to pull out our measuring tool, and you want to have in your mind, like, okay, how high do I think Zora can go? And remember, as it continues to go up, you can always like rebalance your range. You can always raise it. It's not locked in, okay? So if Zora does 100% increase, that'll take it to here, right? If it goes up 200%, that'll take it here, okay? So it'll probably be a good idea to give it like 200%, give it some room to run, and you still give it some room to drop. Like on the downside, we're looking at 44% room to drop. I don't think it's going to drop that much. And normally when I'm setting my range, I like to look at support and resistance. So this was like a key level of support, right? We saw it touch here and here a few times and here. And from current price, we can see that that will be an 18% drop. So I'm cool with that. 18% drop, and maybe just a little bit, because the tighter your range, the higher your yield. So as it goes up, you can always rearrange it, but we want to maximize our yield. So
for this example, like obviously, like if this is factoring in, like, you know, Zora could pump in the short term. I mean, we're going to start doing these shows weekly. Would this sort of like, I feel like generous sort of span, would this be something that users can set and forget for a week, or how often should people be actively monitoring these?
well, you should at least check it a few times a day. Like pop open your, there's an app for Dex Screener. You just pop open your phone. You can see, like, if you're still in range, it doesn't matter how high or how low, as long as you're in between the lines, you're making money. So it's good to at least check. It doesn't take that long. My rule is if it's out of range for like more than 6 hours, the data shows that it'll be a good time to rebalance. So if we do one of these and we're up here for 6 hours, then I'll move my range. I'll move maybe my bottom line to right here, previous support, and my top line to here. You're just trying to keep price within your ranges, right? But it's good to check it, as it's fun too, because every time you check, you made more money. So it actually gets quite addicting. So this is going to be our ranges from 7 cents all the way up to 18 cents. All right. So now I'm going to have you share your screen, and I'm going to walk you through how to get in the pool.
I'm just going to share the Zora window. So here it is, Zora paired with USDC. Which was the high yielding one? Was it USDC or was it WETH?
It was USDC. Now you see how it has at the top, it's USDC. Now I did click the WETH one, but you can always go back and forth between WETH and USDC. Here, I'll show you what I mean. Go ahead and hit search again on the left and type in Zora. Hit the second. Wait. Yeah, the third one. Okay. So you see where it says USDC and WETH/WETH at the top.
Oh yeah.
Okay, so this is showing the Zora USDC. When you click WETH, then it shows Zora with WETH. So you can go back and forth between both pretty easily.
That's clever.
Yeah. All right. So now you're gonna open up another window, and I assume you already have some ETH in your Base wallet.
Yep.
Okay, cool. Sure. Open up another window. We're gonna open up Aerodrome. All right. So I actually am gonna go back to your Dex Screener. I am gonna have you put the lines on there because I want to show people something here. So you see the baton all the way over to the left? Hit the arrow next to it. Hit the arrow next to it. And now you have your horizontal ray start.
Horizontal raise.
Yeah, that way you don't have to click that every time. So now you have it at the top.
Okay.
Go ahead and click it and just hit your chart anywhere.
And you,
Yep. And then hit the line again and then hit your screen anywhere. All right. So now I'm gonna have you drag it. So the bottom line is gonna be at 0.074. Oh, and hit price at the top at the no, you want it on USD because we're getting into the USD one. You had it on market cap. So now you have to hit them again.
All right, that's fine.
Yeah, this is good. So that way people know how to work that screen. It's a lot of intricate stuff. So yeah, you want to put that on 0.074.
So just have it a little bit like just 0.074.
Yeah, 74. That's good. And then the top one is going to be 1885, 0.1885. And even if you can't get it to the exact, it's just going to round it off to the closest tick. You have these buckets, and each bucket represents its own price range. So even if you put like if you're in an ETH USDC pool and you want to put your range from 2,000 to 3,000, 2,000 is going to represent a tick bucket. It's a price range, so it might be from 1,950 to 2,030. It's always going to round you off to the nearest tick. All right, so now you have your ranges set. So now what you need to do is you need to know how much Zora and how much USDC you need. So remember when I said that the closer you get to the bottom of the range, since this is Zora USDC, you're going to be in more Zora because Zora is the underperformer, right?
Mm-hmm.
You get to the top of the range, you're going to be in more USDC. So since we're entering into this pool closer to the bottom of the range, what are we going to need more of?
We're gonna need more USDC.
No, more Zora because
Zora.
Yeah, Zora's the underperformer. So we're like, let me go ahead and measure it. It's hard to get the exact numbers, so sometimes you just gotta play with it. But 24%, and then so yeah, we're gonna be around 90% Zora, 10% ETH. So now you're gonna go to Aerodrome and you're gonna swap for your Zora.
So I have ETH and Zora at the moment.
Okay. So you already have Zora right now?
No, I have like 0.2 ETH, like $1,000 in ETH, and I now need some Zora. So
okay,
how much of that you saying I should buy? Like 10%.
You're gonna need more Zora. So you're gonna use around like 85% of your ETH to buy Zora, since we're getting in at the bottom of the range. All right. So now go back to your deck screener. I want to make sure you do something here. So you see at the bottom right, hit watch list, main watch list. So that way, whenever you go back to deck screener or when you pull it up on your phone and you log in your email, you won't have to set your ranges. So that way it's easy to track. All right.
Okay.
So now go back to your Aerodrome. Okay. Now you go to liquidity at the top. All right. So now you're going to do new deposit.
It's kind of exciting for me.
Dude, you're going to make some good money, bro. And then you're going to do your USDC. You got to get USDC. So you need to swap some ETH for USDC. So you want to, because I forgot we weren't during the Zora WETH pair. So you need some USDC too.
Wait, question though. I'm looking at this. The Zora with 1,500% APR. That sounds amazing. But what does this concentrated volatile 100 mean?
It's basically just a concentrated liquidity pool.
How tight would the range be on that?
We're gonna put it in the ranges that we determine. If you want to get into the Zora ETH pool as well, we can. You can get in both, and you can just put a little bit less in this one if you want.
Yeah, so I'll put 0.02 in USDC. It's like $90 in USDC, and then $90.
Yeah, let's do both. Let's do both.
All right, sounds good.
So now liquidity, and do the same thing. New deposit. Okay, Zora, USDC, and then hit concentrated pools.
This looks very nice. 50,000% APR.
See, yeah. See, and that's what I'm saying. Time in the market, you never know which one is going to be doing better. So, yeah. All right. So now let me go on my Yield Hunter tool so I can look at which one. It was the 0.27% fee tier, and that looks like
this is 0.25.
Must have just changed, but go ahead and hit that one. New deposit. All right, now scroll down. And then this is where you're going to input your ranges. So I'll read it off to you so you don't have to swap back and forth between both of them. So you're going to hit for your low 0.07411. All right. And for your high, you're going to put 0.1885. Yeah. And click off the screen. And it shows with that range right now, the average is around 540. But that can go up and down. They just give you like an average with that range. And if you want to make it a little tighter, you can. It's up to you.
I'd be okay with making it tighter. So like if, for example, so let's go back to the Zora.
Here, I'm a just put the range to previous all-time highs, which is at go to the high and put in 1493 and drag your range pretty much to the top of that candle, the all-time high. You got to click the blue line and drag it, the top one. So I don't see your cursor anywhere. Click in the middle of your screen.
Yeah, I'm clicking. Can you see my cursor?
No.
I'll just type in. So that's 1491.
Oh, it's showing your deck screener. I don't see your arrow drums.
Oh, sorry.
Yeah. No, you get it. So you want to type in 1476.
76.
And now go back to your so now it's showing 738. So boom. That's like around 2%. So go back to your deck screener. And you want to so now you drag that blue line, the top one,
down to the top wick.
Yep, and that's good right there. So now you're going to go back to Aerodrome.
Question though. So this is the daily. If I anticipate the next week is going to range like here, just consolidate in the same area, how tight do you go? Like, do you ever go like?
Sometimes, like, so if we measure this from bottom to top right now, this range is 96%. But I'll go as narrow as like, dude, I've been as narrow as 10%. Right now, the pool that I was telling you about that we're doing inside of our challenge, my range is like 36%. So it just depends on like a bunch of factors. So, but I can go pretty tight sometimes. But I normally don't go as tight like that on USDC pairs because I want to be in range when the big candles hit. I will go more tight on the Zora ETH pool because they both will be moving in tandem together.
That's a valid point. All right, well let's do that. Let's do the local low and the all-time high.
Okay, so now you want to go back to Aerodrome and you have 1476. Looks like you already put it down. So scroll down.
76.
Hit USDC, yeah, and then under USDC, type in 91.76. So yeah, you got two. So you'll have a $300 position for this one, and then we can put a little more in the other one. So now you want to hit deposit. This show is gonna be a hit. I can already tell. So next week, when we come back, we'll stake. No, don't stake it yet. Next week when we come back, we'll stake it, and that way we'll be able to look at the difference in the yields. So now, my good brother, congratulations! You are officially a market maker.
Okay.
So now, if you pull up, pull up another window and type in revert.finance.
Is that like revoke.cash?
No, revert.finance. This is where you track your liquidity pools. So now this website, do you want me to call you Base Junkie or you want me to call you by your actual name on here?
I mean, Base Junkie works, so for the people that are watching, my real name is Mike. And so last week, it's cool that we actually saw each other at On-Chain Summit. Like I just got back from San Francisco, but I kept introducing myself as Mike. Like, yo, I'm Mike. I was like, hi, I'm Tom. And then they're like, wait, are you Base Junkie? I was like, yeah, Base Junkie. They're like, oh, it's you.
No, I got you. Yeah, people do the same thing with me. Like my name is Crypto Noah Online, but my real name's Vince. But anyway, so when you come back on here, this data isn't correct right now because you just got into the pool like 2 minutes ago.
Yeah, this is negative 1,000% APR. It's like, no.
No. So yeah, you got to give this time to calibrate. When you come back and check this in like 10, 20, 30 minutes, an hour, you have already accumulated fees. So right now you're making money when you go and put your kids to bed, when you go take a shower, when you go on a date with your wife, you're generating income right now. So you hit that expand button. So this is going to give you all of your data. It'll show you your ROI. It's going to give you your pool APR. So these little bars right here, you see the bars?
Mm-hmm.
I like to call that liquidity mountain. So the white one is current price. These are all of the ticks. Each bar represents a tick. Remember how I was saying, like, you put in a number, but it's going to round it off to the closest tick. These are all the ticks for the Zora USDC pool, and each pair has its own price range between the ticks. So the ETH USDC, the tick might be, $1,500. Bitcoin, it might be, $2,000. Each one's different. And when you scroll down, it shows you how many days. And when we continue to do this show, we'll come and look at this. We'll check. We'll rebalance if we have to, which eventually we will. And then, yeah, just keep doing it like that. All right. So now let's hop into your Zora ETH pool. So go to the deck screener.
Back to deck screener. Or okay, yeah.
Yes.
Here we are.
So now hit ETH. All right. So now the range that I will put on this one, because I know you want to turn it up.
Would you go down this low, or really tighter?
I don't think.
It's
I mean, I don't think it's gonna go that low, but you never know.
I honestly, I think we're gonna go up from here.
Yeah, I think we're gonna go up from here as well, but that doesn't mean it might not come down and touch a bit. So I like to give it room a little bit on the top and the bottom, just so that I can stay in range. So for this one, I would go the bottom at zero. What is that? 1, 2, 3, 4 zeros. 1851.
Okay.
And then first, let's go to. This is another intricacy that you're about to learn, because Aerodrome, they show their pair prices weirdly sometimes. So go to new deposit, and we're just going to get things set up, and then hit Zora wrapped ETH.
Can I use ETH, or do I need to wrap it first?
Well, you can use ETH and it'll wrap it for you, because it has to be wrapped in order to be able to be using a smart contract. So now you hit that new deposit for Zora wrapped ETH. Okay, so you see how it's showing like 000. Okay, so the other pool, it doesn't do that. But if you hit ETH, hit ETH where it says set price range.
Yep.
Yeah, hit that. You always want to make sure it's matching up with what's on your price or on your chart. So on our chart, you see all the zeros first. So you want it to be showing that, because if it's not and you put in your ranges, it'll be wrong. So go ahead and hit Zora again. Does that make sense though?
I didn't catch that last part. So
okay. So you see how, like, around the current price, the high is 49,000 and the low is 52K, and it's only like 3% above and below current price.
Yeah.
Okay, now hit Zora.
Nope. And then the deck screener. Oh, Zora here.
So now it's showing that. So the difference is this chart is showing how many shares of Ethereum you can get for one Zora. When you hit the other button, it's showing how many Zoras you can get for one ETH. It's the opposite.
Oh, so yeah. Sorry, that makes sense.
Yeah, so you just make sure they match up, because if you have one showing Zora ETH and the other one's ETH Zora, and you put in the numbers, it won't work. Or it'll work. You'll get in the pool, but you won't be in range. So now go back to your deck screener, and now let me measure this. How narrow do you want to do this? Your case study here.
I want to get tight. I want to maximize the yield, even if we fall out of range for a day.
That's okay. We can do it. It's a case study. So I say we go around 36%, and we go let's go from the bottom at 1851, however many zeros that is. So you're already pretty close to there. In the top, let's go previous support. Let's go to here. Let me go up just a little bit.
Would that be like 25?
Yeah, like 25.80. Price has been ranging in that since August 14th. So that's a good enough time. Had this been your range since August 14th, dude, you'd have been a money printer. So now we're gonna go ahead and input them. I'll read them off to you so you don't have to go back and forth. So you're gonna do the bottom is 1851.
1851.
And then the top is going to be 2580.
2580.
And then click off. So now you remember how it was showing like 15 whatever % APR? The Zora
Mhm.
USDC one is still paying more for right
Okay,
now. So this one is
96%.
96%.
So, I mean, in traditional finance, that's
I know
exciting.
it's like DeFi spoiled us. This is like we look at 96%. We're like, fuck, man, that fucking sucks.
Yeah. So hang on. If I were to go, let's go super tight. So this is like the plus minus 3%.
3% above and below current price. Yeah, it's
How
still not as much as your wide USDC range, but that could change. That's just right now. Like if Zora starts to get accumulated a lot, that can jump. We just don't know when it is.
because these are the dailies. So yeah, I'm getting greedy. I'll do the numbers you said. Sorry. All right. So was it 1851 and 2580,
Yeah, 2580 was the high.
and the low was
Yep, you got it. 1851. It just rounded you off to the closest tick. That's why I did that.
okay.
So
All right.
now you scroll down and then you put in you put in Zora. So now you have to go a little bit less Zora.
Hang on.
Oh, hit use native. Yeah, sorry.
So hang on. If I wanted to use all of this, so I use all the Zora because I seem to have calculated a bit too much Zora and not enough ETH and USDC.
You
If
just
I
gotta
wanted
do
to use, huh?
you just have to do a swap and then you can always add liquidity to your current position.
But what if I shifted up the lower tick?
Like if you tighten your range a little bit from the lower side.
Yeah.
And then
Which,
okay, so what's the question?
so if I raised my lower range, would I be buying more Zora?
For the Zora WETH pair, the closer it gets to the bottom, you would be getting more ETH because ETH is the under. Or no, you're right. You would be getting more Zora. Correct. Sorry. Sometimes I get it mixed up.
I'm just gonna use this range. It's so crazy to be like, I mean, 97%. That's pretty wild.
Yeah, it's pretty good. And keep in mind, like when the price of Zora and ETH continues to pump, you're accumulating Zora in wrapped ETH, right? It's going to be you can claim it at any time, and then the price of them rise and fall, then boom. So go ahead and hit refresh. Let's see if you made any money yet on Revert. Oh, did you do confirm it already?
Yeah, I believe so. So confirm deposit.
Oh, it's probably just waiting a bit.
Well, once it's a pair, will it still show up in my wallet?
As an NFT.
Okay, let me refresh this page and see.
That was another thing when Uniswap v3 happened. Uniswap v2, you got issued an LP token. Remember the LP tokens?
Yeah,
So with the launch of Uniswap v3, each position is its own NFT.
that's quite a big shift.
Yeah. So you've already accumulated a penny.
Hey, let's go.
Yep. When you wake up tomorrow, it'll be more. And that APR isn't correct. Everything still has to like flesh out. And it's probably not loading your other one because you just hopped in. Did it confirm it already? So the reason why it didn't work is because you need to leave some for gas fees. It won't work if you do all of your ETH because you need some gas.
You're right. All right, so saving $2 in gas, for gas, I should say. All right, so I'm going to deposit this now. So cancel that previous one. Confirm deposit. It's not giving me a chance to press a button. Do I need to refresh?
No, sometimes it just takes a little bit.
Man, I want to refresh.
Maybe hit your Coinbase.
Oh. Dude, you're right, man. I'm too impatient.
It was just about to load, huh?
Yeah. It literally, I was like 1 second away. I'm like, no.
Oh, it confirmed.
I confirmed it now.
Yeah, bro. I'm on Aerodrome every day, so I just know how it works, man. It just
Okay.
sometimes
So the site's processing a lot, just a little bit sluggish at times. So we were saying before the show, we're gonna do like 30 minutes to an hour. We're about an hour and 20 minutes. So I want to say a shout out to the 180 people who've tuned in so far.
180 people tuned in.
Yeah, man.
Hey, I can't see the data, but hey, everyone who tuned in, we really appreciate you guys. It means a lot. This is our first episode, and it makes us feel like we're putting out some good stuff. So, thank you sincerely, guys and gals.
Honestly, so I think with very little promo, I think the information has been high. The alpha, I've learned a lot, and to be honest, some stuff. My goal on this format is to just ask the the dumb questions because, like, well, look, I genuinely want to learn. I mean, maybe there's other people that are thinking the same questions, the same thing. So no ego from me. I'm happy to put it out there that I am a novice on this side because I want to learn. I want to start generating some YeFi, some YeFi, the DeFi yields. But bro, I want to say, I'm very excited to start the show with you. Any final thoughts from you?
Subscribe to Crypto Noah on YouTube. That's my YouTube where I put out a lot of DeFi content, fundamental analysis on projects. I think it's the best fundamental analysis on the internet. And then Know It Owls, thanks Embryo Dolphin. We appreciate you. You're awesome as well. Subscribe to Know It Owls on YouTube. We put out more macro content. This is where this show is going to be posted, and we got a lot of stuff in the works. And then I'm going to put a link. If you look in the description of any of the videos, there will be a link to join our free community where we post stuff in there. And right now we're doing a special for our Nestler membership where you can get access to our course that goes through all the stuff I just showed, Base Junkie, and a lot more. It's $248 one time. You get access to that for life, and as well as the updates that we add to it. And then for the actual membership, it is $59 a month for now. We only have 50 spots left. And we do an onboarding call on Sunday. We do the 49 Weeks of Freedom Challenge call on Monday, where we literally farm with you. And we're in some pools that's paying out a little bit more than what we showed on here. Base Junkie's going to be in there as well. On Wednesday, we do a farming with you call. I just did that like an hour ago where I literally farm with my members. Thursday, we do a Parliament of Pros call where we have all of our coaches come on and we just chat markets. And all of the calls are recorded. So that way, if you guys can't make it, you'll still get access to it. So I hope to see some of you guys in there.
Amazing. Well, I'm excited. So I'm going to put the last $200 in one of these pools. I haven't decided yet. Probably the ETH, the WETH Zora pool, just because I want to hold my ETH as well. And then next week, let's see where that $1,000 is. So, guys, I want to say thank you to everybody who tuned in today. We are going to be doing these weekly. If you have any questions, put them in the comments. Ask it in the live chats. Crypto Noah is an expert in this field. I'm a novice, so I'll do my best to ask the questions and keep it casual, keep it in layman's terms, so that everybody can understand. And Noah, I appreciate your patience and your time, and I look forward to going on this journey with you. So
yeah, appreciate you, my good brother. I'm excited to continue this, man, and help as many people as we can benefit from this crazy bull market that we're about to experience. We haven't seen nothing yet.
Exciting times. All right, guys. Once again, we'll see you next time. Until then, stay based.
Yes, sir.